Okay, now we have MCQ 26, which is combined question on income from other sources and capital gain. What is it? Let us understand. Mr. Vikas transferred 600 unlisted shares of XYZ Private Limited to ABC Private Limited. Who's selling to whom? Vikas is selling to ABC Private Limited. What is he selling? He's selling 600 unlisted shares of XYZ Private Limited. This asset Vikas is selling to ABC Private Limited on 15 December 22 current year for rupees 3,50,000, which is the actual sale consideration, when its fair market value was 5,15,000. The index cost of acquisition of shares for Mr. Vikas was computed at 4,25,000. This is readily given to us. Index cost of acquisition. Determine the income chargeable to tax in the hands of Mr. Vikas and in the hands of ABC Private Limited in respect of the above transaction. Friends, if you can understand, for Vikas, there will be capital gain, and for ABC Private Limited, section 56 subsection 2 clause 10 subclause C will be applicable. Movable property, 9 specific assets if acquired for less than fair market value and the difference exceeds 50,000. Difference exceeds 50,000, income from other sources chapter, that will be applicable. So let's just understand, 3,50,000 for Vikas is the actual sale consideration and the fair market value is 5,15,000. Whenever unlisted shares, that is unquoted shares, are sold, section 50CA becomes applicable of capital gain chapter. Let's calculate capital gain for both of them. First, for Vikas there will be capital gain. For Vikas, full value of sale consideration according to section 50CA will be either actual sale consideration 3,50,000 or the FMV 5,15,000, whichever is higher, so 5,15,000, and minus index cost of acquisition is given to us as 4 lakh. Index cost of acquisition is 4,25,000 minus 4,25,000. 90,000 will be the long-term capital gain for Vikas. But as far as ABC Private Limited is concerned, what will happen is income from other sources, 56 subsection 2 clause 10 subclause C will be applicable. FMV of the asset which they have acquired is 5,15,000 and the amount paid to purchase is 3,50,000. The difference is 1,65,000. If the difference is more than 50,000, then entire difference is chargeable to tax under the head income from other sources. 90,000 for Vikas and 1,65,000 for ABC Private Limited. Let's see whether this is one of the option or not. 90,000 and 1,65,000. Option A, B, C, D. First is 90,000 chargeable to tax in the hands of Vikas as long-term capital gain and nothing taxable in hands of ABC. Wrong. 75,000 chargeable to tax in the hands of Vikas as long-term capital gain and nothing taxable in hands of ABC Private Limited. Wrong. 90,000 chargeable to tax in the hands of Vikas as a long-term capital gain and 1,65,000 chargeable to tax under the head income from other sources in the hands of ABC Private Limited. This is the correct answer according to us. And the 75,000 chargeable to tax in the hands of Vikas as long-term capital gain and 1,65,000. This is the wrong answer. Correct answer is C. Let's check what's Institute's answer. Our answer is C. Institute's answer is also C. That's it. With that, this MCQ comes to an end. See you in the next video with the next MCQ.